Welcome to the Deep Dive. Today we're diving into NPST, a major player in India's digital payments revolution.
It's a fascinating company.
It is, and you've given me their latest annual report, plus some other documents about the company. And I've got to say, this is way more interesting than your average financial report.
Oh, yeah, definitely.
It's really well written.
It is. They've done a great job of telling their story and explaining what they do.
Okay, so let's get started with the big picture.
Sure.
NPST's annual report paints a really vibrant picture of India's digital payments landscape.
Yeah, really does.
They've really emphasized the phenomenal growth of digital payments in India,
Right.
particularly the rise of UPI.
Yeah, UPI is huge, and it's only getting bigger.
Yeah, they say back in 2017, UPI saw 430 million transactions.
That's right.
Now they're projecting that number to triple by 2028.
Triple, wow.
I know.
That's massive.
That's a game changer.
It is.
And it's not just about the numbers.
Right.
The report highlights how UPI is gaining global recognition as a fast and efficient payment system.
Absolutely, and it's really putting India on the map as a leader in the digital payment space.
Yeah, they're even saying it's positioning India as a leader in this whole digital payment space.
Yeah, I'd agree with that.
So NPST is right at the heart of this digital payments revolution.
They are.
They describe themselves as the digital railroad for banks, financial institutions, and even other fintech companies.
That's a good analogy.
Can you break that down for us a little bit more?
Sure. So think of NPST as the backbone, the infrastructure that enables all these different players to connect and access these new age payment technologies.
Okay.
Their platform, it's called Payments Platform as a Service, or PIS for short, acts like a universal adapter. It's designed to be flexible and cater to diverse segments through API integration.
It sounds incredibly complex.
It is behind the scenes, but they make it look easy for the end user.
Can you give us a real-world example?
Yeah, sure. Imagine you're shopping online and you use your bank's app to make a payment behind the scenes. NPST's technology might be powering that seamless transaction through their product, NPST EVOK. Or let's say you're at a local store and you pay using a QR code that's likely being facilitated by another NPST product called NPST Quinks, their solution for offline payments.
So they're like the tech wizards behind the curtain, making these everyday transactions possible without us even realizing it.
Exactly. And they're not just focused on India. They have ambitious international expansion plans capitalizing on the global adoption of UPI and other real-time payment systems.
Wow, so really thinking big.
They're already enabling international person-to-merchant transactions via UPI in countries like the UAE, Nepal, and Singapore.
That's smart, considering the global shift towards digital payments. It sounds like they have a clear vision for growth.
They do. They're well positioned for the future.
But let's talk about how NPST is actually doing. They're boasting some pretty impressive financial performance, right?
Their financial performance is remarkable. They've achieved record revenue growth for the third consecutive year in fiscal year 2024. They surpassed INR 1,000 million in revenue, hitting a staggering INR 1,300 million.
1,300 million. That's a huge number.
It is.
What's driving this impressive growth?
Well, remember that booming digital payments market, we talked about NPST, is strategically positioned to ride that wave. Plus, they're expanding their product portfolio and venturing into new markets. It's a recipe for success.
It certainly seems to be working.
Is
Their net profit growth from 2020 to 2024 has a CAGR of 126%.
Yeah, that's incredible.
Incredible.
Yeah.
But before we get too carried away with all these impressive numbers,
Right.
what about the risks? Every business has challenges.
Yeah, of course. And NPST acknowledges that one of the major challenges they highlight is managing fraud.
As digital payments grow, so do the opportunities for fraudsters.
Exactly. It's a constant battle to stay ahead of the bad guys.
That's a really important point.
It is.
They can't just focus on preventing fraud. They also need to minimize those false positives, those instances where a legitimate transaction is mistakenly flagged as suspicious.
You're right. It's all about finding that balance between security and a smooth customer experience.
Exactly.
And they discuss how they're investing heavily in AI and ML-based fraud detection capabilities to address this challenge.
So they're using cutting-edge technology to fight fraud.
Yes, they are.
Okay, so they're growing rapidly, they're profitable, and they're taking steps to manage risk. But how are they actually planning to use their resources to achieve their future goals?
They've outlined a framework called MTST 2.0, which they describe as a platform for disruption and agile solutions.
Interesting.
Yeah, it focuses on building 5 key areas: product, customer, people, brand, and financial capital.
It's like they're building a solid foundation for the future.
Exactly. And they're not just talking about financial capital, they're investing in their people, their brand, and most importantly, their products.
And a big part of that product investment is in AI-driven solutions.
Right. Particularly in the areas of threat detection, intelligence, and risk management, they seem to be placing a big bet on AI as a key driver of their future success.
It's a smart move considering the power of AI in analyzing vast amounts of data and identifying patterns that humans might miss.
Definitely. And as they invest in these advanced technologies, they also emphasize the importance of data privacy and digital ethics. They're aware of the responsibility that comes with handling sensitive customer information.
That's reassuring to hear.
It
It
is.
sounds like they're taking a holistic approach to their growth, considering not just the financial aspects, but also the ethical implications.
It's a responsible approach.
Now, before we move on to the details of their financials, let's talk a bit about the people behind NPST, who are the key players driving this success.
Well, the annual report highlights their leadership team, particularly the CEO and managing director, Deepak Chamtakar. He has over 20 years of experience in the fintech world with previous leadership roles at Sponko Ltd. And Frost & Sullivan.
So he's a seasoned veteran.
He is. He brings a wealth of knowledge and experience to the table.
And it's not just the CEO.
Right.
They have a strong leadership team in place with experienced professionals across various departments.
Yeah, they've got a good team.
Their collective expertise seems to be playing a key role in NPST's success.
It is a team effort, for sure.
Now I think it's time to dive into the numbers and take a closer look at their financial performance.
Sounds good to me.
Let's get into the nitty-gritty of their financial statements and see what those numbers reveal about their overall financial health.
Okay, let's do it. Welcome back to our deep dive into NPST. You know what's really striking about this annual report is how well they articulate their understanding of the larger trends that are shaping digital payments in India.
Yeah, they go beyond just stating facts and figures.
Right.
It's like they have this deep understanding of what's driving the industry and how they can capitalize on it.
Absolutely. For instance, they talk about how UPI's accessibility has been crucial for financial inclusion in India.
Okay.
They highlight that it's not just for smartphone users. Even feature phones can access UPI, which is a big deal in a country as diverse as India.
That's a great point. They're not just targeting tech-savvy urban folks.
Right.
They're thinking about bringing digital payments to everyone. And that ties directly into their business model, right? They're targeting a wide range of customers, banks, payment aggregators, merchants, even consumers.
Yeah, they're taking this multi-pronged approach, providing solutions for every player in the digital payments ecosystem.
So let's unpack this business model a bit.
Yeah.
They talk about two main revenue streams.
Okay.
The technology service provider business, or TSP, and the payments platform as a service, or PayOS.
Right.
We touched on PayOS earlier, but let's break it down a little bit further.
Sure.
So the TSP business is pretty straightforward. Think of it like this. They're the behind-the-scenes tech experts, making sure your bank's app works smoothly, or helping online stores process your payments securely.
Right.
Every time they do that, they earn a fee. It's a classic service-based model.
Exactly.
That makes perfect sense.
Yeah.
What about the PayOS side? How do they make money from that platform?
Well, they've got a few different strategies. Sometimes they use a licensing model where clients pay a one-time fee for the software and then an annual maintenance charge. They also offer customization services where clients pay for additional features or upgrades.
So it's a mix of fixed and variable fees tailored to the client's needs.
Precisely. And then they have their SaaS model, software as a service.
Okay.
This is where it gets really interesting.
How so?
In the SaaS model, clients pay based on their usage of the software.
Okay.
It's like paying for your electricity. The more you use, the more you pay.
Makes sense.
So a client might pay a small fee per transaction, or a fixed monthly fee, or even a fee per user login.
Okay, so it aligns the revenue with the value they're providing to the client.
Exactly.
But it's not just software, right? They also sell hardware.
That's right. They generate revenue from selling POS terminals, card readers, and other devices that merchants need to accept digital payments.
So they've got all their bases covered from the software to the physical devices.
Yep, they're a one-stop shop for digital payment solutions.
It's a very comprehensive approach.
It is.
Now, where do they see this business model heading? What are the key growth drivers they're banking on?
Well, they're betting big on a few key areas. One is the rise of omnichannel banking.
Omnichannel banking.
Yeah, customers want seamless banking experiences across different channels. Mobile apps, websites, ATMs, physical branches. NPST sees an opportunity to provide the technology that powers these integrated experiences.
So it's like being able to start a transaction on your phone and finish it at an ATM.
Exactly. It's all about convenience and making things super easy for the customer.
Okay.
Another area they're focusing on is the rise of embedded finance.
Embedded finance, what's that?
This is where financial services are integrated into the products and services of non-financial companies.
Can you give an example of that?
Sure, imagine booking a flight online, and right there on the airline's website, you can buy travel insurance or even get a loan to finance your trip. That's embedded finance. NPST wants to be the tech provider that enables these kinds of integrated financial services.
Wow, that's fascinating. It's like turning every business into a potential fintech player.
It's blurring the lines between traditional industries and finance.
What other growth drivers are they excited about?
Open banking is another big one. This involves allowing third-party financial service providers to access customer banking data securely through APIs.
APIs.
Yes, application programming interfaces.
Right.
This opens up a whole world of possibilities for creating innovative financial products and services. NPST sees a huge opportunity in building the infrastructure that supports this open banking ecosystem.
It sounds like they're right at the forefront of the fintech industry, ready to ride the wave of these emerging trends.
They're definitely a company to watch.
But remember we talked about the challenges that come with rapid growth, particularly managing fraud risk.
Right, they're very upfront about this challenge. As digital payments skyrocket, so do the opportunities for fraudsters. They're investing heavily in AI and ML to analyze data and flag suspicious transactions.
They're also emphasizing the need to minimize those false positives.
Those situations where legitimate transactions are mistakenly flagged as fraudulent.
Right.
It's a balancing act between security and customer experience.
Absolutely. And they're not just relying on technology.
Right.
They also talk about building a culture of security awareness within their organization and among their partners.
It's like a human firewall working alongside the technological one.
A layered approach to risk management.
Exactly.
Now, we've talked about their impressive revenue growth, but what about the deeper financial details? Let's dive into their financial statements and get a better understanding of their overall financial health.
Sounds good. Let's start with their profit and loss statement, often referred to as the P&L.
Okay, so let's take a look under the hood and really dissect NPST's financials.
Let's do it.
We've got their standalone statement of profit and loss for the fiscal year ending March 31st, 2024.
All right.
To be honest, spreadsheets aren't exactly my thing,
I hear you.
but I'm ready to learn.
Great.
So first up, total revenue over 127 crores. That's a pretty impressive figure.
It is, yeah. It shows they're doing something right.
And if we compare it to last year's numbers, it shows significant growth. What's really contributing to this revenue?
The bulk of it, about 126.5 crores, comes from their core operations, specifically the sale of services. That's really the heart of their business, providing those tech solutions and payment processing services.
Okay, so that's where the magic happens.
Exactly.
Now, they've got a smaller chunk, about 1 crore, labeled other income. What falls under that category?
That's going to be things like interest income, which is relatively small, and other miscellaneous income they might generate. It's not their main revenue driver, but every bit counts.
Makes sense. Now, let's look at the other side of the coin.
Yeah.
Their expenses. It looks like they're spending around 83 crores. What are some of their major expenses?
So their biggest expenses, employee benefits expenses, almost 44 crores. This covers salaries, wages, benefits for their workforce. Remember, they have a team of over 300 dedicated payment associates, and they're actively hiring more talent.
Right, they need a skilled team to support their rapid growth.
Yeah.
It makes sense that this would be their largest expense. What other notable expenses do we see?
Other expenses make up about 23 crores. This is a mix of things like rent, utilities, professional fees, and other general operating costs, essentially the cost of keeping the lights on and running the business smoothly.
So they're investing in their people, maintaining their operations, and generating substantial revenue. The big question is, what's their profit?
Drum roll, please. After subtracting their total expenses from their total revenue, their profit before tax comes to roughly 44 crores. Then factoring in taxes, their profit after tax is a little over 26 crores.
Wow, a profit of 26 crores. That explains why their CEO was so optimistic in his message.
Yeah, they have a lot to be proud of.
That's not just good, it's incredible. Now, let's shift gears a little bit and look at their standalone balance sheet as of March 31st, 2024.
Okay.
What insights can we gain from this?
So think of the balance sheet as a snapshot of NPST's financial health at a specific point in time. It shows us their assets, their liabilities and their equity. Okay.
Starting with their assets, the first thing that jumps out is their cash and cash equivalents, about 25.5 crores.
Okay, so that's a good chunk of readily available funds.
It is. It means they have cash on hand to cover short-term obligations and pursue growth opportunities.
Got it.
Then we have trade receivables around 61 crores.
Okay.
This represents money owed to them by their clients for services already delivered.
It's like an IOU from their customers.
Exactly. It's important to keep track of these to make sure they get paid on time.
Right.
They also have other current assets totaling about 12.5 crores,
Right.
which includes things like prepaid expenses and other short-term assets moving onto their non-current assets. We see property, plant, and equipment valued at about 11.5 crores.
Those are their fixed assets, like their offices and their equipment.
Exactly the things they need to operate their business.
What about their intangible assets, things like software and brand value?
Good catch. They've got intangible assets worth around 19.5 crores. These assets don't have a physical form, but still hold significant value. So adding it all up, their total assets are worth over 130 crores.
Right.
That's quite a bit of value they've built now. Let's look at the other side, their liabilities, their obligations to others.
Sure. Their largest current liability is trade payables, coming in at around 22 crores. This represents money they owe to their suppliers for goods or services they've received.
So it's like the flip side of trade receivables.
Exactly. They need to manage these payables effectively to make sure they maintain good relationships with their suppliers.
Makes sense.
They also have other current liabilities totaling around 12 crores, which includes short-term borrowings, accrued expenses, and other obligations that are due within the next year.
Okay, moving on to their non-current liabilities, they have around 24 crores in long-term borrowings. These are loans they need to repay over a longer period, usually more than a year.
That's right.
And then finally, we arrive at their equity, which represents the owner's stake in the company.
Right.
They have a share capital of almost 19.5 crores and reserves and surplus of about 91.5 crores.
Yes, that represents the accumulated profits they've reinvested in the business.
So if we add up their liabilities and their equity, it should equal their total assets, right?
Precisely, both sides of the balance sheet add up to about 130 crores. It's all about balance, just like a financial scale.
Okay, last but not least, let's tackle the standalone cash flow statement. I've always found this one a bit tricky.
The cash flow statement is like a financial GPS tracking the flow of cash in and out of the company. It tells us how they generate and use their cash.
Okay.
It's divided into 3 sections: operating activities, investing activities, and financing activities.
All right, let's start with operating activities. What's happening there?
This section focuses on the cash flow from their core business operations. We start with profit before tax, which we saw earlier on the P&L statement, about 44 crores. Then we adjust for non-cash items like depreciation.
So even though depreciation is an expense, it doesn't involve actual cash leaving the company.
Right. We also adjust for changes in working capital, which includes things like trade receivables and payables. These adjustments end up decreasing their cash flow from operations by about 35.5 crores.
So their net cash flow from operating activities is about 13 crores. This means their core business operations are generating positive cash flow.
Exactly. Now let's move on to investing activities. This section looks at how NPST is investing its cash.
There's a significant cash outflow of about 21.5 crores for purchase of property, plant, and equipment.
Right.
That suggests they're investing pretty heavily in their infrastructure.
Yes, they're expanding their operations and need the facilities to support that growth. They also spent about 1 crore on intangible assets. This could be related to acquiring new software or intellectual property.
Okay, so their net cash flow from investing activities is about negative 22.5 crores. They're putting their money to work, investing in their future.
Exactly.
Now let's look at financing activities. This section focuses on how NPST is raising and managing its capital.
Right. The most eye-catching item here is proceeds from issue of shares, which brought in a whopping 129 crores. That must be from their recent SME IPO.
That's a significant cash injection for the company.
It is. They also have proceeds from borrowings of about 10 crores. They're not shy about seeking additional funding to fuel their growth.
And on the other side, they have repayment of borrowings of about 8.5 crores and interest paid of about 1.5 crores. It's a balancing act between taking on debt to fuel growth and managing those debt obligations responsibly.
Absolutely. Their net cash flow from financing activities is about 120 crores, largely driven by their successful fundraising efforts.
So if we add up the net cash flow from all 3 activities, we see a net increase in cash and cash equivalents of about 120.5 crores. they're ending the year in a very strong cash position.
Absolutely. They're generating cash from their operations, strategically investing in their future, and successfully raising capital. It's a powerful combination.
Wow, we just navigated through three complex financial statements.
Right.
I have to say, I'm feeling a lot more confident in my ability to understand financial reports.
Me too. It's all about breaking it down and looking at the story behind the numbers.
Exactly. And remember, these statements are just the beginning. We could dive even deeper into specific ratios and metrics to gain even more insights into NPST's financial health. But we'll save that for another deep dive.
Sounds good.
So after all this analysis, what are your key takeaways about NPST? What stood out to you the most?
Their strategic vision and execution are truly impressive. Their understanding of the industry, their business model, their strong financial performance, their focus on risk management, it all points to a company poised for continued success in this dynamic world of digital payments.
I couldn't agree more. They're not just riding the wave, they're shaping it. And for you listening, we encourage you to keep exploring. Go beyond the headlines, dig into the details of companies that pique your interest. You might be surprised by what you discover. Until next time, keep diving deep.